Multifamily Mindset
Podcast. Think bigger.
Welcome to the Multifamily Mindset Podcast. I am your host, Zach Rucker, co-founder of Black Cedar Investments and coach here at the Multifamily Mindset. If you're just joining us, welcome aboard our growing community. And for those loyal listeners, I'm excited for today because we're switching up our episodes. Those that are new here, Tuesdays we do interviews with our mentorship students. Thursdays, Dallas comes in and unpacks mindset principles that you can take from those student stories and other principles to apply to your life. Now I'm bringing in what I call the Multifamily Minute, where we're bringing you a quick tip and trick around the multifamily business that you can take and implement to your business right away. So with that, let's dive into today's episode. Today, the episode we're going to cover is a question I get asked a lot when someone's looking at a deal, analyzing a potential investment opportunity, is how do I determine what rents should be at? I mean, that's a great question. How do we really know where rents should be? Sometimes it's subjective, but we're going to dive into an actual formula that you can use to help you kind of set that parameter. Because there's a couple different ways. One way that I give answers to is market research. You got to do your research, which is diving into comparable properties, diving into a CMA report, property management companies, CoStar reports, other market research tools out there. And then there's also a little formula you can do called the affordability test. And this one is critical. It's a simple test, yet it's critical in determining what your pro forma rent can be. So with that, I'm going to break it down step by step on how to figure what rent should be. Step one is to first find out what is the median household income within a 1 mile radius of the property that you're looking at. Ways to find that out can be some of those reports I mentioned earlier, like a CoStar report. Others can be through the census. The census has all this data, it collects it. You can dive into that. Just go to the census.gov in their data section and dive into figuring out what the median household income is around your property. From there, once you have that, you'll need to calculate what the rent to income ratio is. The way to find that out is to take the average rent. If there's a current rent on the property right now that tenants are paying, and you multiply it by 12 months, get you your annual rent amount. So you're going to take your median household income and divide it by that annual rent amount to get your rent to income ratio. For example, $55,000 is the median household income around the subject property. You take $1,000 as the current rent on average, times it by 12, you get $12,000 for the year. You take that $55,000, divide it by 12, and that's going to give you 4.58 as your rent to income ratio. What that means is a tenant can pay rent 4.5 times based on their income. Step 3 is then, at this property, they are affording rent easily at 4.5 times. So what is the max rent that we could charge, but still make it affordable for the tenants? The rule of thumb, and a lot of property management companies go off of this, is a 3x, 3 rent to income ratio, meaning that tenants could pay at least the rent 3 times based on their income. Hey, listeners, thank you for tuning in to the MFM Podcast. We truly appreciate your support and hope you're enjoying the insights from our incredible guests. We have one small favor to ask. Please leave us a review and rating. Your feedback means the world to us. And to show you our appreciation, we're giving away some great prizes to some lucky listeners who leave us a review. So scroll down, share your thoughts, and help us continue to bring valuable content. Thanks, and back to the show. So the way to find out what max rent is, we're going to change up the formula. It's going to be the median household income, divide it by 3, that 3x rent income ratio, then divide it by 12, and that's going to give you your monthly rent that you could charge. So the formula would be $55,000 divided by 3 divided by 12 is going to equal $1,528. So now I know my pro forma rent can be up to $1,500 from an affordability standpoint, a tenant could afford that if that's where I want to get rents to. Now, that's how you do the affordability test. The next step would be to do your market research, take a deeper dive to really see, okay, what are your competitors charging? What's realistic in this marketplace to make sure that aligns? But at least this gives you one step closer to what's affordability. If you're trying to push rents higher than that $1,500, that's going to let you know this $55,000 median household income in this area can't sustain that and won't be able to hit anything above that $1,500, which then makes you have to adjust your numbers down or see if they're just move on to the next property. This one might not be able to be pushed rents as high as you'd like to, but look at your comparables, see how they are operating. We're going to dive in deeper on another episode on how to really dive into the market research aspect of rent to determine this. If you liked this episode, this quick tip, please give us a review, a rating, share it as well, and give us some feedback. We're going to put an email in the show notes where you can reach out to and give us some feedback on maybe some other tips and tricks that you want to hear on these multifamily minutes. But with that, hope you were able to take away some pointers today and apply it to your business when you're looking at deals. And we will see you next time on the next episode.
Multifamily Mindset Podcast. Think bigger.